Hello viewers, welcome to my channel. I'm Hasham. So now I'm going to start the next problem on cash flow statement. Problem number 10. So far 9 problems I've completed till the last video. So if you have watched those earlier 9 problems, definitely you got the command regarding the making of cash flow statement. So every problem 1 or 2 new points you will come across. Remaining 90% of problems points are same. So if you watch each and every video, definitely you will get a lot of grasp on this topic of cash flow statement. So now I'm going to read out the next 10th problem. So before starting the problem, I expect my viewers to have a printout of the problems from the link under my description. So 10th problem, the following balance sheets relate to Devi Prasad and company. You are required to prepare a cash flow statement. 31st December 1991 and 31st December 1992. So current year 1992. So we have to make a cash flow statement for the year ended 31st December 1992. So the data is given: capital, reserves. Capital is also given, reserves is also given. So it's a corporation, it's a company form of organization where we can find out the cash from operating activities from reserves. Cash flow from operating activities we calculate from reserves. So capital last year 7,50,000, current year 8 lakhs. That means during the year 50,000 rupees shares were issued. When shares are issued, it will be taken under financing activity. You can see here cash flow from financing activity, issue of shares 50,000. Right? Now reserves. The breakup of reserves is not given in the problem. In the problem, the breakup of reserves are not given, only reserves are given. So last year reserves are 50,000, current year is 60,000. So increase in reserve by 10,000. So here you can see here, increase in reserve 60,000 minus 50,000, 10,000. This is the starting point for cash flow from operating activities. Next, long-term loan. This will come under financing activity. Long-term loan last year 2 lakh. Current year 1,40,000. That means the long-term loan has been repaid. Cash outflow. Because last year it was 2 lakh, current year it has become 1,40,000. 60,000 rupees long-term loan repaid. So it will come under financing activity. So see, repayment of long-term loan 60,000. 2 lakh minus 1,40,000. Now bank loan. One more loan is there. Bank loan last year 50,000, this year nil. No bank loan at all. That means bank loan is repaid. So repayment of bank loan repaid 50,000 outflow. So all outflows we will put it in bracket. Then current liabilities. Current liability will take it under working capital, increase or decrease. Then provision for tax. Now remember, this is the difficult point you have to remember. Provision for tax last year 25,000, current year 70,000, nothing is given. Only provision for taxation is given. So here you have to make the assumption that last year's provision for taxation is the tax paid during the current year. Whatever provision for taxation made during the current year will be paid in the next year. So last year's provision for taxation is paid during the current year, and current year's provision for taxation is a non-cash item. It's a non-cash item. Next year it will be paid. So current year's provision for taxation will be taken under non-cash item. Adjustment for non-cash item will take provision for taxation 1992. Current year 70,000. Last year's provision for taxation was 25,000. Last year's provision. This is paid during the current year. So here you can see income tax paid 1991. Last year 25,000. So last year's tax paid will take it here. And current year's provision for taxation will be taken as non-cash item. This point already we came across in the previous problem also. Next, proposed dividend. Same treatment for proposed dividend. Last year's proposed dividend is assumed as paid during the current year, and current year's proposed dividend is a non-cash item. So current year's proposed dividend is 10,000. 10,000 is the proposed dividend for current year. Add back. Here you can see proposed dividend 1992, 10,000. And last year's proposed dividend is assumed as paid during the current year. Paid during the current year. So that will be taken under financing activity. In financing activity, dividend paid 1991, 10,000. That's all. Next item is goodwill. Goodwill last year 2 lakh, current year 1,50,000. Goodwill has decreased. That means how the goodwill will decrease? It is written off. Goodwill will not be sold. See here, goodwill is an intangible asset which is attached to the business. It cannot be separated from the business. It cannot be sold. So when goodwill has decreased, the assumption is it is written off. Goodwill is written off. So goodwill written off is a non-cash item. Goodwill written off is a non-cash item. Goodwill written off 50,000. Next item is machinery. Machinery last year 5 lakh, current year 5,50,000. So there may be some purchase of machinery because machinery has increased. Furniture last year 2 lakh, current year 3 lakh. Again, there is a purchase of furniture. Then stock, debtors. These two are current assets. We'll consider in working capital. Then cash. Opening and closing cash is given last item. Cash and cash equivalent. Preliminary expenses. There is a mistake in the problem. Preliminary expenses is dash in 1991. It is given 10,000 in 1992. That is a mistake. So remove that 10,000 from second column and put that 10,000 in the first column. Printing mistake is there while typing. So that 10,000 rupees is given in the second column. Cut off that one and write the 10,000 in the first column. It means what? Preliminary expenses were there in the last year. Current year preliminary expenses are not there. That means preliminary expenses are written off. Preliminary expenses are written off. It's a fictitious asset, imaginary asset. So writing off of fictitious asset is a non-cash item. It's a non-cash item. Preliminary expense written off 10,000. Over. Now additional information. During 1992, depreciation written off on machinery and furniture rupees 50,000 and 75,000 respectively. So here additional information it is given that depreciation was provided on machinery and furniture. So it is better to make two accounts, machinery account and furniture account, to find out how much machinery has been purchased. Now, first of all, after preparing this machinery account and furniture account, we take the opening and closing balance given in the problem. Last year's machinery account shows 5 lakh rupees. This is the last year balance brought down, and current year closing balance of machinery is 5,50,000 given in the balance sheet. In the problem it is given last year machinery 5 lakh, current year machinery 5,50,000. Similarly, furniture last year 2 lakh, current year furniture 3 lakh. So opening and closing balance of machinery and furniture we have noted. Now depreciation. In the additional information, depreciation is given. Machinery depreciation is 50,000. By depreciation 50,000. Here furniture by depreciation 75,000. Whatever information given in the problem we have recorded. Now we have to find out what is the purchase of machinery. Furniture. First of all, come to furniture. Credit side 75,000 plus 3 lakh. 3,75,000. From 3,75,000 deduct 2 lakh. So 3,75,000 minus 2 lakh. You will get 1,75,000 balancing figure. This is the purchase. To bank. We'll write down to bank. Balancing figure. It's a purchase. So during the year, furniture purchased for rupees 1,75,000. This is not given in the problem. By making this account, we come to know that opening balance was 2 lakh, closing balance was 3 lakh, depreciation provided 75,000. So during the year, furniture purchased 1,75,000. This furniture purchased 1,75,000 will come under investing activity. Cash flow from investing activity. Purchase of furniture 1,75,000. Whenever there is a purchase, there is cash outflow. Money is going out. That's why bracket. Similar treatment for machinery account. Credit side machinery 50,000 plus 5,50,000, 6 lakh. 6 lakh minus 5 lakh. Balancing figure 1 lakh. So 1 lakh rupees is the purchase of machinery. So to bank, balancing figure, purchase. So machinery was purchased for 1 lakh. Again investing activity. Purchase of machinery 1 lakh in bracket because it is cash outflow. That's all. So these two accounts we are prepared to find out the purchase of machinery, to find out the purchase of furniture. That's it. Now we'll come to the solution. Cash flow from operating activities. First of all, increase in reserves. Just now I told you reserves have increased by 10,000. Then adjustment for non-cash, non-operating items. First of all, depreciation on machinery 50,000, depreciation on furniture 75,000. So both I have taken. Depreciation on machinery 50,000, depreciation on furniture 75,000. Now provision for taxation of current year and proposed dividend of current year. These are non-cash items. The provision for taxation current year is 1992, 70,000. Proposed dividend 1992, current year it is 10,000. Goodwill written off. So if you compare the goodwill last year with current year, goodwill has decreased by 50,000. Goodwill written off. So goodwill written off 50,000. Preliminary expenses last year it was 10,000. Current year nil. That means preliminary expenses were written off, write off, add back. So take the total, you'll get 2,75,000 operating profit before working capital changes. Now we take the working capital, current assets and current liability. First of all, you can see the current liability. Current liability. Current liability last year 25,000, current year 30,000. Last year 25, current year 30. 5,000 rupees increase in current liability, add. Increase in current liability, add 5,000. Now come to current assets. Under current assets, first item stock. Last year 1,50,000, current year only 50,000. So there is decrease in stock, add. Because you have to remember the rule, increase in current liability or decrease in current assets should be added. Already every problem I am telling, this rule will never change. So increase in current liability, decrease in current assets should be added. So here stock has decreased, it should be added. So decrease in stock, add 1 lakh. Next to debtors. Debtors last year 25,000, current year 50,000. Increase in debtors, deduct. Increase in debtors, deduct minus 25,000. Over current liability, current assets, all we have taken. Now 2,75,000 plus 5,000 plus 1 lakh minus 25,000. 3,55,000 is the cash profit under operations before tax, less income tax. Now provision for taxation of last year, 1991. So last year's provision for taxation 25,000 given in the problem. Deduct, because minus means deduct. So 3,55,000 minus 25,000, 3,30,000 is cash generated from operating activities. That's it. The one part we have completed. Now cash flow from investing activity, only 2 items. Purchase of machinery, purchase of furniture. Just now I have explained you. So this purchase of machinery, purchase of furniture, both are cash outflows. So total 2,75,000 is outflow. So cash used in investing activity. Now cash flow from financing activity. Now we compare the share capital, loans and dividend. 3 items you remember. Share capital, loans and dividend. That's it. The share capital, issue of shares 50,000. So if you compare the share capital of last year with current year, the current year share capital has increased by 50,000. During the current year, shares issued. It's a cash inflow. When shares are issued, cash inflow, so plus 50,000. Repayment of long-term loan. If you compare the long-term loan of last year and current year, the current year loan has decreased by 60,000. The current year loan has decreased by 60,000. So repayment of long-term loan, 60,000. If you compare the bank loan, last year there is a bank loan of 50,000, current year nil. That means bank loan has been repaid. So bank loan repaid 50,000. Whenever there is repayment, it should be in bracket because outflow. Next one is dividend paid. Last year's proposed dividend is assumed as paid during the current year, 1991 dividend 10,000. Over. Now you take the total 50,000 minus 60,000 minus 50,000 minus 10,000. You get minus 70,000. So this minus 70,000 is cash used in financing activity. Now take the total of the second column. Here second column 3,30,000. 3,30,000 minus 2,75,000 minus 70,000. You will get minus 15,000. This minus 15,000 is net decrease. If you get positive, you will write net increase. But here you are getting negative, minus. The net decrease in cash and cash equivalent during the year. Now cash and cash equivalent at the beginning of the year means last year's figure. The last year's cash is given in the problem 25,000. 25,000 is the last year's cash. So 25,000 minus 15,000, you will get 10,000. This is the cash and cash equivalent at the end of the current year. Now if you see the balance sheet, current year cash, it is 10,000. In the balance sheet in the problem, it is given current year's cash is 10,000. We got 10,000. That means our calculations are correct. So this is the end of problem number 10. Come on, now we'll start the next problem. Problem number 11. The following are the balance sheet of Vijay Limited. So we are given two balance sheets, that is last year 31st March 2017, 31st March 2016. 2016 last year and current year is 2017. So equity and liability, shareholders fund, share capital. Share capital last year 30 lakh, current year 40 lakh. So issue of shares. That will be taken under financing activity. Reserves and surplus, we want the breakup. The total reserves and surplus are given last year 10 lakh, current year 31.2 lakhs. All the values are in lakhs. Lakh means 100,000. So all the values are given in lakhs. So we want the breakup of reserves and surplus. The last notes to accounts. In the notes to accounts below the balance sheet, you can find the details of reserves and surplus. In this reserves and surplus, we are having capital reserve, profit on redemption of debentures 0.2 lakh. 0.2 lakhs means 20,000. 0.2 lakh means 20,000. So 20,000 is the profit on redemption of debentures. That means during the year some debentures are redeemed. At the time of redemption, 20,000 less rupees have been paid by the company to the debenture holders. Next, surplus in the statement of profit and loss statement. In profit and loss statement, there is a surplus last year 10 lakh, current year 30 lakh. So how much is the increase in surplus? 20 lakh, and that is a starting point in operating activity. Cash flow from operating activity, increase in surplus in the profit and loss statement. So 30 minus 10, 20 lakh rupees is the increase. Next, share premium. Current year 1 lakh. That means during the year shares were issued at a premium. How much share capital increased? 10 lakh rupees share capital increased. And premium is 1 lakh. So totally 11 lakh rupees we will receive, the company will receive by issuing shares. 10 lakh rupees share capital and 1 lakh rupee premium. Last line it is given share premium 1 lakh. So totally 11 lakh rupees the company will receive on issuing the shares. So in financing activity we can see here, cash flows from financing activity, issue of shares including premium 11 lakh. So we have seen the reserves and surplus. Next item, 6% debentures. The 6% debentures last year were 15 lakh, current year 10 lakh. So last year 15 lakh rupees worth of debentures were there, current year it has come down to 10 lakh. That means during the year 5 lakh debentures, 5 lakh rupees debentures have been redeemed. Redemption. So redemption of debentures again will be taken into financing activities. Financing activities. Redemption of debentures means cash outflow. The company is repaying back to debenture holders. How much? 5 lakh. But in the adjustment it is given capital reserve, profit on redemption of debentures 20,000. That means when the company redeemed the debentures, it has not repaid full 5 lakh. Out of 5 lakh rupees, 20,000 rupees less. So 5 lakh minus 20,000, 4 lakh 80,000 rupees will be paid to the debenture holders. So here redemption of debentures 5 lakh minus 20,000. This 20,000 is the profit on redemption of debentures given in the notes. So 4 lakh 80,000 is the cash outflow. That's why in bracket. Next comes current liability. Current liability, trade payable. Trade payable already we know it's a current liability, will adjust in working capital. No adjustment, no detail required. Now short-term provisions. For short-term provisions we are given the notes. Notes, provision for taxation, proposed dividend. The provision for taxation already we have seen. last year's provision is paid during the current year, and current year's provision will be taken as a non-cash item, right? Then proposed dividend. The proposed dividend, last year proposed dividend is assumed as paid during the year, and current year's proposed dividend is a non-cash item. Last two problems we have done this. Proposed dividend we have treated. Last year's proposed dividend paid during the current year, financing activity. In financing activity, you see dividend paid last year, 1,50,000 paid, so bracket. Then current year's proposed dividend, non-cash item. This is a non-cash item. So in this proposed dividend, current year 2 lakh. Over. Now next page, fixed assets. We have seen the short-term provisions. Then non-asset side. Fixed assets. Fixed asset last year 46 lakh, current year 55 lakh. So the details are given in notes. So what are the details regarding fixed assets? Next page it is given. Original cost of property A and original cost of plant and machinery. So two fixed assets are there. That is property and machinery. Property, there is no depreciation. Last year property was 20 lakh. Current year property is 25 lakh. That means during the year property purchased for 5 lakh. Because 5 lakh property increased. So this 5 lakh rupees will be taken under investing activity, because purchase and sale of fixed asset will be taken under investing activity. So purchase of property 5 lakh, see here, purchase of property 5 lakh in bracket because outflow. Then original cost of plant and machinery last year 40 lakh, current year 45 lakh. Then provision for depreciation, this means accumulated depreciation. So accumulated depreciation last year 14 lakh, current year 15 lakh. Written down value, WDV, that means original cost minus depreciation, you will get WDV. So here 45 lakh minus 15 lakh, 30 lakh. Similarly 40 minus 14, 26. So written down value. Then total A plus B, that means total assets, property and machinery, 55 lakh, 46 lakh. This is the information given. Now come back to the balance sheet. Fixed assets we have seen. Non-current investments, there is no change. Last year 2 lakh, current year 2 lakh. That means there is no inflow, no outflow. The same 2 lakh rupees non-current investment, ignore, don't take into consideration. In cash flow statement, we consider only if there is inflow or outflow. If it is same, don't consider. Then long-term loans, that means long-term loan given, because it is given in assets. Don't think that loan means always a liability. When loan is given, it is an asset. So here long-term loan, long-term loans and advances given. So last year it was not there. Current year 1,50,000. That means this company has given long-term loans and advances. So this will be taken under financing activity. So in financing activity, long-term loans given. No, sorry. Long-term loans given will be taken under investments, under investing activities. So investing activities, long-term loans and advances given 1,50,000. Remember, investing activities means the purchase and sale of fixed assets and long-term investments. So these loans and advances are just treated as an investment. Then current assets. Current assets, inventory and trade receivable. These two will consider in working capital. Then lastly, cash and cash equivalent. This will be taken in the last item. Over. All the items of balance sheet I have discussed. Now additional information, further information. During the year, plant and machinery costing 50,000. Accumulated depreciation 3 lakh. During the current year, plant and machinery costing 5 lakh. Costing 5 lakh. Accumulated depreciation 3 lakh was sold for rupees 1 lakh. In the previous problem also I told you, whenever there is a sale of fixed asset, we will open two accounts. One account is plant and machinery account, another account is accumulated depreciation. Because in this problem, in adjustment it is given, one machinery was sold. That's why we have to make two accounts, right? And taxation paid for the last year 6 lakh. See here, this is also a new point. First time we are coming across. If this taxation paid for the last year is not given, then our assumption is last year's provision for taxation is paid during the current year, and current year's provision will be taken as Non-cash. Non-cash. But in this problem, the new point is tax paid during the year 6 lakh is given. So we have to make one account. Which account? Provision for taxation account. So 3 accounts we need in this problem. Plant and machinery account at cost, accumulated depreciation, and provision for taxation. Prepare cash flow statement. That's all. A lengthy problem. A number of new points you are going to learn in this problem. So have some patience. Watch this video not once, twice, thrice. Then only you can be able to get the command on this type of problems. A little bit difficult problem, more new points. First of all, when we open the plant and machinery account cost, accumulated depreciation, we'll take the opening balance. Plant and machinery is an asset. Opening balance will be taken on debit side. Opening balance will be taken on the debit side. Closing balance will take it on the credit side. So if you go to the balance sheet and notes of the balance sheet, you can see original cost of plant and machinery last year 40 lakh, current year 45 lakh. So last year opening 40 lakh, current year end of the year 45 lakh. So first of all, you should take the opening balance of plant and machinery and closing balance of plant and machinery. Don't take all these things. As I explain you, take a notebook, write down the account, whatever I am telling. Simply you prepare the accounts, whatever I am telling you, just to write it down. So opening balance and closing balance of plant and machinery. Opening balance 40,000 to balance brought down, by balance carried down. Next one, provision for depreciation. Provision for depreciation means accumulated depreciation. Now ulta, opposite. Opening balance on credit side, closing balance on debit side. Because asset will show debit balance, accumulated depreciation will show credit balance. That's why we should take on credit side, by balance brought down opening to balance carried down closing. So in the problem you can see provision for depreciation 14 lakh, 15 lakh. Opening 14 lakh, closing 15 lakh. So here 14 lakh opening, 15 lakh closing. So what I told you, first of all you should take the opening and closing balance of plant and machinery at accumulated depreciation. To balance brought down, by balance carried on, by balance brought down, to balance carried on. Over. Now, whenever an asset is sold, 3 entries will be passed. 3 entries will be passed. Already 3 problems I have explained you in the previous videos. First entry, sale proceed. Write it down. Keep a notebook when you watch this video. And immediately whatever I am saying, write it down. First entry, bank account debtor to machinery account. At what price it was sold? It is given in the problem for 1 lakh. It was sold for 1 lakh. So bank account debtor to machinery. So machinery account credit side, by bank sale 1 lakh. Now you write down in the account, by bank sale 1 lakh. First entry over. Second entry, accumulated depreciation account debtor to machinery account. Accumulated depreciation account debtor to machinery account. How much is the accumulated depreciation given in the problem? 3 lakh. 3 lakh is the accumulated depreciation on the machine sold. So accumulated depreciation account debit side to plant and machinery 3 lakh. And plant and machinery credit side, by accumulated depreciation 3 lakh. Here debited, here credited. Second entry over. Third entry, profit or loss. Actually the cost of that machinery was 5 lakh and accumulated depreciation was 3 lakh. So 5 lakh minus 3 lakh, 2 lakh. That means book value of the machine is 2 lakh. And this 2 lakh worth of machine is sold for 1 lakh. Is sold for 1 lakh. So there is a loss. Because the value is 2 lakh, but we are selling it at rupees 1 lakh. So there is a loss of 1 lakh. So entry will be profit and loss account debtor to machinery account. Write it down. Profit and loss account debtor to machinery account. So machinery account credit side, by profit and loss account, loss 1 lakh. Loss 1 lakh. That's all. All the 3 entries are posted. Now we find out the balancing figure in these 2 accounts. In these 2 accounts. The balancing figure. Debit side, if you take the total 3 lakh plus 15 lakh, 18 lakh. Now 18 lakh minus 14 lakh. So 4 lakh rupees is the depreciation provided during the year. Depreciation provided during the year for all the machinery. The machinery which is there and the machinery which is sold. So all the machinery depreciation is 4 lakh. And this depreciation will be taken as a non-cash item here. Right? Only by preparing this account we come to know there is a depreciation of 4 lakh. This is the balancing figure, profit and loss account, balancing figure, depreciation provided for the year. That's it. Now we'll come to the plant and machinery account. This 5 lakh plus 45, 50 lakh. If you take the total on the credit side, 50 lakh. So 50 lakh minus 40 lakh. What is the balancing figure? 10 lakh. So to bank, balancing figure, purchase. 10 lakh rupees worth of new machinery purchased. That means during the year, one machine is sold and one new machine is purchased. It is not given in the problem. By preparing this account, we come to know there is a purchase of plant and machinery by 10 lakh and sale of plant and machinery 1 lakh. This purchase and sale will come in investing activity. In investing activity, purchase of plant and machinery. What is the purchase amount? 10 lakh. So 10 lakh rupees in bracket because outflow, purchasing. Similarly, sale of machinery, inflow. 1 lakh rupees the company is getting inflow. So sale of machinery 1 lakh. That's it. These two accounts are completed. Now I am coming to provision for taxation. Because in the last line it is given tax paid 6 lakh. If that adjustment was not given, we would not have to prepare this provision for taxation account. We don't require. Because in the last line it is given tax paid. That's why I am making this provision for taxation. Provision for taxation will show a credit balance. Provision for taxation shows credit balance. So credit side, by balance brought down, opening. Debit side, to balance carried down, closing. So in the balance sheet, in the notes, it is given. Second note you can see, provision for taxation last year 5 lakh, current year 10 lakh. So last year opening 5 lakh, current year 10 lakh. So opening balance, closing balance are taken. Now income tax paid. Last sentence of the problem given, income tax paid during the year 6 lakh. So entry will be provision for taxation account data to bank. When tax is paid, entry provision for taxation account data to bank. So debit side to bank, tax paid 6 lakh. 6 lakh rupees tax paid. Now take the total on the debit side 16 lakh. 16 lakh minus 5 lakh. So 11 lakh rupees is the provision for tax made during the year. Provision for taxation made during the year is 11 lakh, balancing figure. This is not given in the problem. By making this account, we come to know there is a provision for taxation made 11 lakh. Now these two items will be taken in the cash flow statement. This 11 lakh rupees provision made during the year, this will be add back as non-cash item. This 11 lakh will be taken as a non-cash item, and this income tax paid will be taken here, tax paid, income tax paid 6 lakh. So these two items will come in the cash flow statement. 6 lakh rupees tax paid and 11 lakh rupees will be taken as a non-cash item. That's all regarding this provision for taxation. Over. Now I am coming to the cash flow statement. Cash flow statement for the year ended 31st March 2017. Cash flow from operating activities, increase in surplus in the statement of profit and loss. Already I told you. In the notes given, reserves and surplus. If you compare the surplus last year and current year, there is increase for 30 minus 10, 20 lakh. 30 lakh minus 10 lakh. So 20 lakh rupees is the increase in the reserves and surplus. Next, adjustment for non-cash, non-operating item. Now carefully you see what are the non-cash items. First of all, depreciation on machinery. How much is the depreciation on machinery provided during the year? Here it is. 4 lakh rupees of the depreciation provided during the year. This is a non-cash item. Here 4 lakh. What is the loss on sale of machine? Loss on sale of machine is 1 lakh. This 1 lakh rupees is a non-cash item. So loss on sale of machinery 1 lakh. Over. Now provision for taxation made during the year. How much provision for taxation made during the year? 11 lakh. So this provision for taxation made during the year 11 lakh. Last one, proposed dividend. This point exactly same what we have done in the last two problems. Last year proposed dividend is paid during the year and current year's proposed dividend is a non-cash. The proposed dividend current year 2017 2 lakh. Over. These are the points, these are the non-cash, non-operating items you have to remember. Now add up all these, you'll get 38 lakh. This is the operating profit before working capital changes. Now adjustment for working capital changes. Each one. First of all, trade payable. Trade payable is given in the problem, you can see it. Trade payable is last year 14 lakh, current year 11 lakh. Last year trade payable 14 lakh, current year 11 lakh. Decrease in trade payable deducted. Decrease in trade payable deduct. How much? 3 lakh. So minus, that's why put in bracket. Now inventory. Now come to the asset side. Inventories. Last year inventory 14 lakh, current year inventory 15 lakh. Increase in inventory deduct. Increase in inventory minus 1 lakh. Next, trade receivable. Last year trade receivable 10 lakh, current year trade receivable 15 lakh. 5 lakh rupees increase in trade receivable deduct. So increase in trade receivable deduct 5 lakh. The only thing always you have to remember in each and every problem, increase in current liability, decrease in current asset should be added, otherwise deducted. Finished. Otherwise deducted. So see, if increase in current liability, add. Decrease in current asset, add. That's all. So 38 lakh minus 3 lakh minus 1 lakh minus 5 lakh, you will get 29 lakh cash profit in operations before tax. Before tax. From this income tax paid, how much is the income tax paid? 6 lakh. Deduct 6 lakh, 23 lakh rupees is the cash generated. Cash generated from operating activities. Now I am coming to investing activities. Cash flow from investing activity. Purchase of plant and machinery 10 lakh, already we got it here, 10 lakh rupees purchase of plant and machinery. Purchase means outflow, bracket. Sale of machinery, inflow. 1 lakh rupees is the sale of machinery, inflow, without bracket. Purchase of property, if you compare the property last year, current year, 5 lakh rupees property increased. So purchase of property 5 lakh in bracket. Long-term loans and advances given. That is an investment. That is an investment. So 1,50,000 in bracket. Now take the total. Minus 10 lakh plus 1 lakh minus 5 lakh minus 1,50,000. So 15,50,000 is the cash used, because negative you are getting. You are getting minus. So cash used in investing activity. Now cash flow from financing activity. Now financing activity, issue of shares including premium. The share capital increased by 10 lakh. And in adjustment it is given share premium received is 1 lakh. So 10 lakh plus 1 lakh, 11 lakh rupees is the issue of shares including premium. Redemption of debentures. Debentures decreased by 5 lakh. Debentures decreased by 5 lakh. But it is given that there is a profit on redemption of debentures in notes. In reserves and surplus there is a capital profit. Profit on redemption of debentures 20,000, 0.2. 0.2 means 0.2 lakh means 20,000. So deduct 5 lakh minus 20,000. 4 lakh 80,000 company has paid to debenture holders. Company has paid to debenture holders. Then dividend paid. Last year's proposed dividend is paid during the current year. 1,50,000 payment. So bracket. Now 11 lakh minus 4 lakh 80,000 minus 1,50,000. 4 lakh 70,000 positive. This is the cash generated in financing activities. Over. Now we take the total of the three values. 23 lakh minus 15 lakh 50,000 plus 4 lakh 70,000. You are going to get plus 12 lakh 20,000. Positive. 12 lakh 20,000 positive value you are getting. So net increase. What you should take? Net increase in cash and cash equivalent. To this we add the cash and cash equivalent of the last year, 2016. So in the problem balance sheet you can see cash and cash equivalent last year 3,50,000. Now you add up 12,20,000 plus 3,50,000. 15,70,000 is the cash and cash equivalent at the end of the year, 31st March 2017. Now you can confirm whether we have done correctly or not. See the balance sheet in the problem. In the balance sheet, you can see cash and cash equivalent current year 2017. It is 15.7. It is 15.7 lakh. 15.7 lakh means 15 lakh 70,000. That means we got 15 lakh 70,000. Absolutely right. That means we have done correctly. Remember, this is a lengthy problem, but it's very interesting. Many new points you are going to learn from this this problem. So don't ignore. Don't take shelter from this type of tough problems. You should take it as a challenge. So watch the video once, twice, definitely you will get a lot of knowledge, command, power on this unit of cash flow statement. So I have explained each and every point on this cash flow statement in this video. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, we will continue the next problem in the next video.